Welcome back, guys. It's your boy Mpumi and Co. with Funds and Kelo, where investing meets more. So, guys, today we back yet again for the currency edition, market breakdown. Right, we're gonna do a market breakdown for currencies. We just recently took, I think it was, when was it? Last week. I think it was last week Friday. We took S&P trades also, which was also provided in the market breakdown. So just to give you a recap, I posted market breakdown where I intended to enter for both Nasdaq and S&P. So Nasdaq, the market eventually did exactly what I thought it was gonna do, or what I wanted it to do in order for me to take my trade. So it did that, and you could have seen that the market did exactly that. It went up. I've posted the results right at the community page on this YouTube channel, guys. I've posted that too then, and you guys can also do your own due diligence and check how the market played out during that time, right? And also S&P entries triggered on Friday just after we closed Nasdaq, so we managed to take S&P entries, guys. So we closed that too. So for this week right now, we're gonna be just doing currencies, and I'm also gonna be giving the Nasdaq, where I'm also planning on entering for Nasdaq, guys. I'm gonna also give you guys that, because I'm also looking for entries for Nasdaq. S&P we holding, we have a stop loss and profit. I'll just show you how the trade is doing so far, so we'll see how it goes, how it plays out. Let's see if it will, because it made its move back to the mid-level zone. Let's see if it will respect the mid-level zone and continue going up. So guys, it's been, I don't know, 2-3 weeks without doing currency, so the market has finally shifted, guys. So if you watched my first video on currencies, my first market breakdown that I posted, you would have seen that initially we wanted to, the market was making its way. I don't know where it was. I think it was just broken out or somewhere. It was somewhere here, guys. So what I said that time is that we're looking for the prices to push back up, right? We're looking for prices to push back up, like I indicated. Yeah, so these are my markings from the last market breakdown. We anticipated the market might break, retest. Then I said after the retest we'll be looking for your entries to the upside, but the market did not do that, did not break and retest. That's why also patience is important. So let me just run it back again. Okay, let me just do this and do it manually quickly. So as you can see, the market, instead of doing that, it respected the the trade. It respected the trend. I mean, the downward trend. So it respected the trend only to come and retest our daily key level here. So let me just zoom out and show you the trend. Like I said, guys, you are looking for buys. Why? Because the market has it hit our daily trend right here. So it's confirming that our daily trend is, it's still applicable at this current moment, right? So within this bullish trend, we also notice that there's a 4-hour trend within that bullish trend, which we are trading out of right now, using the support of key levels and zones. So as you can see, the market has respected here. It created a what? It created a fake out. So like I said, you only look for sells when the market breaks our daily key level. That's when you'll look for selling opportunities on lower time frames, given that it has broken and it's pushing out of, yeah, with the daily time frame, right? So the market broken out, guys, to do what? It wanted to break, right? It did a fake out. While it does a fake out, guys, always at the support channels, guys, always look for reversals patterns. So it did W pattern, right? If you guys can see it, it did a nice beautiful W. We had our first, our second, then the market broken out. You can see it much better on smaller time frames. Let's just zoom out. So as you can see right now, okay, I'll get back to that. Let me just remove this so that you can see the W pattern, and let me use a line if you, in case you guys do not still see it. Let me just use a line. As you can see, we had a beautiful W pattern, or you can look at it as a head and shoulders too. There's a nice beautiful head and shoulders. If we switch to the line, we can see that we had and inverted head and shoulders. I've covered the lessons for head and shoulders, guys, in my earlier videos, so you can go check it out and see how we utilize head and shoulders. Like I said, head and shoulder, if you're there, a head and shoulder is okay. That was a bad one. Let me just use arrows. So like I said, a head and shoulder, whether it's a reversal head and shoulder or an inverted head and shoulder, the key thing that you need to consider or to keep in mind is that head and shoulders are just reversal patterns. So you can find a head and shoulder on the support, and you can find a head and shoulder on the resistance. Okay, my thing is not, it's just be an ugly head and shoulder. Okay, it's being weird right now. But as you can see, guys, we first had our first push. Let me just push this out. What am I doing to my day? Let me just lock it so that I don't fiddle with it again in the future. So we had our first shoulder here, our head, and our second shoulder here. So like I said, head and shoulders won't always appear like the textbook version, so they'll appear weirdish, or you can see a W here, whatever you want to go with, guys. But the key thing is that I understood that this is where we're looking for our entries. Here at this area, yeah, this is where we're looking for our entry. So what did the market do? Broken out, retested on this channel, broke back into our 4-hour trend, right? It broke back into our 4-hour trend. It broke back into our support. It broke back into our key level. Therefore, we just had to wait for those beautiful 30-minute retests, and there you go. No retracement, nothing. So right now I'm gonna just continue, right? So that's basically it. And like I said, guys, when I post a market breakdown, it does not initially mean that the market is gonna move at that specific time, right? It does not mean that. All you need to do is just follow the market and see what it's trying to tell you, so you can utilize your next opportunities, right? So let's go back to 4 hours. So guys, I don't trade currencies like that. I love indices, so I'm more focused on indices. So I'm doing this also to also help out people who need help with currencies and stuff like that. And the reason why I'm covering currencies while trading, while I'm focused on indices, is that currencies have also back tested my strategy on currencies. You can also go check out my back test on currencies too, and you can see that I do perform well. So that's why I'm also covering anything that I do perform. If I'm struggling with something, I will not cover it. But if it's something that I know that that's why I'm covering it. So this would have also been a nice entry right here. So it would have taken these entries right here. The things that I don't literally trade currencies. So I would have been looking for entries right here until up there, just to complete this trend. Just to simply complete this trend, guys. So currencies can take time. So the retest would have been right here, the 30-minute retest. I would have gone with the 30-minute retest, and we would have pushed prices for a 1.1%, right? 0.2%, right? Then we would have risked at least 45. Let's just go for a nice 45%. We like taking advantage of the market. We love taking advantage. So I'll tell you guys, also cover some of the points why you need to be able to. I will cover, like, in terms of what's this, how you can compound with forex trading using a tight and not too tight stop loss, but just a reasonably sized stop loss, and you go for 1%. This is we're not even risking half of what we were willing to make. Okay, just minus 5% of that. But anyways, I'll show you guys my account. I'll cover that. I'll give you more details about that on the psychology lesson that I'm going to record and post after this. So as you can see, we would have targeted this would have been my entry until we wanna complete this trend. Because once the market gets here, it can either continue going up, right, to complete this whole move right here, or the market can reverse from here back down here. But we will check that out once we get there. So this would have been my entries for GBP USD. Next up is what? USD ZAR, right? On USD ZAR. Another interesting one here, guys. As you can see, this is my analysis from still that day. As you can see, this is still my analysis from that day. And like I said, if the market breaks below the daily, we're looking for all-time sells. When the market is above the daily, we are looking for buys. That's why we were trading against the overall trend, knowing that we are in a buying momentum too. So we could have capitalized on this trade. Like here, it followed setup, it broke out, failed to break our daily here, respected it, creating a beautiful W, and went straight to the top, and we capitalized on that W, guys. We capitalized on that W. And I also gave out uh this setup on my first currency video, right? Like I stated, we're looking for entries. Once the market breaks here, we are looking to enter until here at the end. You want to exit just before the end of this, because why? The market might respect this and break, which it did. So now let's just cater for what's happening quickly right now. So also this would have been another successful trade, which did not happen immediately. It took time to mold, guys. It took time to mold. So now let's just see what happens right now. Let's see if it aligns with GBP USD in a way or not. Let's see if it aligns in a way. So right now here, okay, let's cater this daily trend quickly. Let's just cater for this daily trend quickly. Okay, cool. Let's just cater everything. Make sure that our trends are all updated. So we'll have our daily trend. Yo, what was that? Okay, no, I don't want to pick you up. I want to drag you. So you want to drag that there. Okay, what we do on the top, we do on the bottom, right? Let me just quickly check this. Okay, cool. So what we do on the top, we do on the bottom too. So let's just stretch this out so we can see exactly what's happening. Then we can just take that and place it at the bottom. So what can we see, guys? We can see that the market has reached our support, right? So the market can push back up right here, because why? We're at the support. We are here at the daily, literally at the, we're not going to be looking for sells here. We rather wait until the market breaks, maybe continues until we get sells. We could have capitalized on those sells in between here, right? So now let's just see what the market is doing. Let's just see if we are going to be getting sells or what's happening right now. Yeah, the problem is that we've reached this area right here. It can continue, it may not. Let's just cater for key levels. Where's the market reversing? Let's just place in our key levels where we can spot out the most touches. We want to cater for this area here. There's touches going on. 1, 2, 3, 4, 5. So beautiful caterings. We're gonna also cater for what? And let's just adjust this so that it aligns with this. It aligns here perfectly. We're gonna place one here. I feel like the wick will do the job. Let me just check. Okay, cool. Okay, cool. Let's see what the market was doing. So right here would have been a nice entry. Right here, once the market has broken back in here, would have been a really nice entry to go with right now. So now the market has hit our support right here, so it can continue or it can go back up here and continue down. So the thing is, what we want to look at this point is how it approaches this area. If it approaches it correctively, we might be looking for sells back to the downside. But if the market breaks impulsively, because it can break back in here, you know. So for me at this point in time, because it's not giving a lot, I will just wait and see what the market does. So right now we also can just stretch out our zones. We want to just stretch out these zones right here, cater for these zones because they're also very sensitive areas. So they're all sensitive areas, right? Want to also stretch out this one right here. So we want to see what the market does, because the market can also break, come back here. If it does respect also this correctively, it comes, breaks here and gets a correction right here, we're going for sales at those areas. It just depends how the market approaches these areas. If it does, we'll we'll look for those sales like that right there. So we first needed to come back here, and depending on how it approaches, we'll just have to wait. If it does come here correctively, breaks this trend, right, comes back down and give us a nice beautiful correction, we are going for those sales. So what we would do right now is we would place in our alert, yeah. Okay, let me just set in a key level there. Okay, so we just want to see how the market reacts and stuff like that. So we'll just place in our alert right, yeah, and we'll see how the market does, because right now I don't see anything promising right now. So we'll just see what it does when it gets back here, because it can also correct and continue going back up, so we'll just see how the market reacts. But for now we can assume that it might want to complete this whole setup right here, but we'll see how it reacts. So the game plan is to literally just complete this setup here before looking for buying opportunities or before looking for selling opportunities. Yeah, that's the overall game plan for now, unless the market spikes up, breaks this daily key level, then we might look for entries right about here again, right about here. So we're still far from there. So now we just want to see what the market does when it approaches here. Then also when it approaches here, you want to see how it approaches here, guys. But we'll just wait and see for USD ZAR. Literally just wait and see what the other currency pairs are doing. Let's check Euro USD. Okay, Euro USD, it did not complete that setup. So normally, like I said in my stop loss trading, I always like putting stop losses and profit. So with the move this big, I would have placed in my stop loss right above our mid-level zone. Just like with indices, we also look for mid-level zones with currencies, guys, because currencies are more, and it also took a very long time for the market to get here. So we would have had our stop loss and profit here. And if you're a person who does not trade with stop loss and profit, so whereby you like, you know what, I'm swinging a whole buy, or it's either gonna be a small loss and that's it, then you would have taken an L here. And like I also said on those videos, if the market breaks above here, you're looking for entries until this area, yeah. So here we would have been, let me see what's happening here. So the market would have broken out, right? It impulsed to the upside. So it impulsed to the upside. So basically what the market was telling us, that we had an impulse correction and an impulse, then here we would have been wiped out. The first wave would have wiped us out. Let me see if we would have gotten an entry here. So yeah, let's see if we would have gotten an entry, because I always wait for break retest, right? Let's see, let's just go to 30 minutes and see if we would have had an entry right here. I think so. Let me see. wouldn't have had a retest, so we would have waited. So this I inserted at that time to show you that once the market breaks above here, we are looking for entry. So how do I enter? I need a break and retest. We need a bullish candlestick and a bearish candlestick and a bullish candlestick, most probably an engulfing. Then we are going for our entries. So let's see if we would have spotted that one out. Let me show you guys. Let's see, because we wouldn't have entered here. Let me just erase this. Why don't I have a specific target? I mean, I would have. Let me see if there's a target. I don't remember why I did not have an exit strategy, because I cannot take an entry without an exit. So the exit would have been here. Let me just make sure that for our time frame, if everything is aligning. Okay, this would have been our exit point, right? So that would have been a nice, beautiful exit point. So we would have, what we would have also done is we would have catered for a new trend right here. Let's cater for this trend right here. We would have catered for this trend right here, this new trend that the market is kind of creating, right? So you always want to have informed decisions, guys. We need informed decisions. So we would need this trend to also support where we're going to be looking for buys, right? Like I stated in the previous video, right? So we would have had this is what we would have had, right? So let's see where we would have entered again. Let's just see where we would have entered. And I'm also going to show you something that the market is doing. It's impulse correction. So you see right here, guys, if we zoom in here, we had a market break. Yeah, it broke and it only did a bearish candlestick, but it didn't give us a bullish candlestick afterwards, so we did not take entries. Here, this bullish candlestick did not give us a touch here. So look at here, we have a bearish and a bullish. So this would have been my perfect entry here. This would have been my first entry here, and I would have taken an L, right? This is what would have happened. I would have taken this trade right here, would have targeted a 156 as usual, and I would have risked 0. If I would have went for 45 like I normally do. What is this now? Oh, like why? Let me just do this, unlock and take this out the way. Took us out there, so yeah, let's leave it there. So but I would have had a stop loss, but it's fine. Let me just not do it like that for now. Let me just leave it because I'm gonna waste time. So okay, cool. Let's see, and we have an entry. Do we have an entry? Yep, here's our entry. It would have been here. So we had is it a hammer? Because we had a touch on the red and a touch on the green, so giving us those confirmations to what? To release, to trigger, to shoot, and would have gone for another 0.45, right? 45. This one is much bigger. It's much bigger than that one. Okay, 45. Let's drag it. 45. There you go. Then we would have released 115. Would have wanted to exit just before that. Let's see how we would be looking like now. So I always do the same thing. As you guys know, like in my currencies, this is I mean for indices, this is exactly same. That's the same thing, guys. I look for areas where I'm going to target, then I release. So it would have been a nice, beautiful sniper trade. And guys, also if you look at this, like I stated, we had an impulse correction, right? We had, let me show you guys with the brush stroke. We had an impulse move. Okay, what's happening? We had an impulse correction, correction, right? Correction, then an impulse move. So we caught with the impulses. So your entries and everything, whether you win or lose, everything must make sense in terms of why did you win and why did you lose. Here the market reversed because why? No, it was creating an correction. But it also did what? It gave us a new trend, guys. The market gave us a new trend whereby the market literally just broke out, retested, and continued going up. It's even reached our overall target, which is here. So right now we want to see what the market is going to do, right? We would have taken those beautiful entries. We won't be targeting this area here if it does. We want to just see how the market will be at from this point onwards, guys. So as you can see, this is literally how I apply my mind and I apply my strategy, how I use everything, how I use reasoning to identify whether I'm going up or I'm going down. So basically everything is doing everything like I stated, like as if it passes this, it will do this, and if I lose, I have an explanation for that. Everything makes sense. Don't just be quick to point. That's why it's important to know what you're where you aiming to enter before you enter any trade, guys. Let me just check the time. I'll just end it off here, right? Let me just do one more. Let's look at something. Oh my word, I deleted that by mistake. Let's look at Euro JPY and see what we have here. A whole new market breakdown. So first, what do we want to identify? We want to identify that the market is overall bullish, but it looks like the market is wanting to change direction. But let's see, let's just add in, let's do our due diligence quickly and see what we dealing with. So here's the trend, right? What we do on the bottom, we do on top. And what we do on the top, we do on the bottom. So the market has hit our overall support area on our trend, right? So we're gonna not use this. Instead, we're gonna use this one. So you're just gonna cater our key levels for currency. So you're gonna have an area right there. So we have our daily playground, right? We have everything sorted in the daily. Just confirm. Let's just let me just put it and see. So we're creating a playground, right? So we need our playground to align with our trend, and that's where we will spot out our entries. So for now, we want to just dive deep into the 4-hour time frame. So what is this telling us, guys? So we know that we hit the support on the daily, on the daily time frame, but also the market is playing below our key level right here. So we want to wait and see what it does, because the market can create a reversal pattern before launching itself up, or the market can change characters, the market can break, give us those corrections, and continues pushing to the downside. So now we're on the support, and on the support, what do? We typically look for buying opportunities, but how do we know when, and how do we know that it's time for us to look for buying opportunities or selling opportunities? First, we need the market to break here. That's when our high probability setups for buys are. If it breaks back in here, we'll be looking for buys. Why? Will be supported by a daily trend, and will be supported by a daily key level. And then all we need to do is just dive on lower time frames and see and try and spot out what is actually happening in the market. So now let's cater for everything. Let's cater. So we're gonna change this into purple quickly. We're gonna change this into purple. We're gonna put in our daily trend. Not our daily trend, I meant it was 4-hour trend. Our 4-hour trend. Okay, let's cater from here to here. So we have our trend right there, right? And so it looks like the market might push down, right? Because we had an impulse from the top here. Also we had an impulse from here. So we're having an impulse, right, guys? We're having an impulse correction. The market might break back until here. So you're gonna be adding also. We wanna also look where I wanna intend on entering is after the market has breaking out of this trend. I needed to break out of this trend right about there, right? Yeah, we haven't touches right about there. So basically I will be looking for my selling opportunities at this area right here, at this area right here. For my buying opportunities, we needed first to break back into our daily time frame. Then we might look for entries from here until this zone over here. So I will place in my alert for if the market gets here and if the market gets here. We're looking for sells here until where? Until this area, yeah. We're looking for sellers from here until here, buys from here until there. So that's basically it, guys. I'll see you guys next time. I'm gonna also be doing a session for psychology soon, so be sure to check it out. Like, subscribe, and hit that notification bell. At 100 subscribers, we're doing live trading, guys. So let's get the channel to 100 subs. Like I said, guys, if you enjoy the content, please like, subscribe, because more content is coming your way, guys. Peace out.